Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, US benchmark interest rates have risen sharply today, with the US Treasury 10-year yield reaching a 10-month high. The US dollar rose sharply too, and tech stocks took fright. The re-rating ahead of Thursday's US Fed meeting is getting a sharper focus as global inflationary impacts do not seem to be easing. American inflation expectations rose to 6% in February from 5.8% in January, back to its November record high. The increase was widespread across age, education and income groups. The same survey revealed that year-ahead household spending growth expectations increased sharply too, to 6.4% from 5.5% in January, reaching a new series high as well. This increase was also broad-based across income and education groups. Foreign direct investment into China is up a lot in February from a year ago, but the base was unusually low in 2021. But trouble is brewing in China as new hard pandemic lockdowns seem likely to trigger shockwaves across global supply chains, both worse and broader than last time. Observers are saying that another major port lockdown there could have a phenomenal impact on global supply chains, still recovering from 2 years of pandemic-related setbacks. Strict virus containment efforts by local governments will weigh on cargo movement inside and out of China and raise shipping prices and delays. And it will trigger a faster exit by firms who once relied on Chinese supply, even if it is a hard thing to do. All of this will accelerate global price inflation. Your new phone is going to cost a lot more. Inside China, their housing market is retreating. Central bank data shows that outstanding medium and long-term housing loans of the household sector, mostly mortgage loans, declined in February for the first time ever. This is happening despite a series of support measures from the government. Copper and iron ore prices are easing again on the expectations China's home building industry is going to stay depressed for some time. And India may have low growth rates for them, but they certainly do have high inflation. Both their producer prices and consumer prices are expected to ease a little in February from the very high January levels, but in fact they rose again. The changes were marginal, but the levels are high. Producer prices are now 13.1% higher than a year ago. Consumer prices are 6.1% higher on the same basis. The US Treasury 10-year yield opens today at 2.11% and up 11 basis points from this time yesterday. And the price of gold starts today at $1,961 an ounce, and that's down a sharp $30 from this time yesterday. And oil prices are also very much lower today, down a sharp $7 a barrel. In the US, they're now just on $100.50 a barrel. The international Brent price is just over $104 a barrel. And the Kiwi dollar will open today marginally softer at just on 67.9 US cents. But against the Australian dollar, we're now at 93.8 Australian cents. That's almost 0.5% higher than this time yesterday, and the highest in 2 months. Against the euro, we're soft at 61.8 euro cents, but against the Japanese yen, we're at a 4-month high. That all means that our trade weight index starts today at just on 73.4 and marginally lower. We welcome your feedback. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.